everyone, this is Natalia Itu and I'm a CPA with Colorado Business CPA. Have you checked out my new book? It's called The Wealthy Intentional Entrepreneur and it's updated for the new tax law. So I highly recommend you to purchase it so you can apply some tax tips for your taxes, and save money on taxes. We work with small business owners and we help them to save money on taxes as well as help them to grow their successful businesses. So today I want to talk about how you can tweak your tax planning when you are on accrual method of accounting. So I know only maybe 2 or 3% small business owners are on the accrual method of accounting. The rest of the people on the cash method. What does that mean? What does it mean? Like, how am I running my business? Cash method, accrual method. Well, with the cash method, you recognize the revenue when you received either check or cash or customer paid you with a credit card. And then when you wrote a check, when you write checks for, to vendors, that's when you take a deduction as an expense, right? So on accrual method of accounting is you recognize revenue for your business is when you send invoice. You send an e-bill, for your customer, and that's when the revenue is recognized. And of course, you're supposed to earn your revenue and then you send invoice to the customer, right? And then therefore, accounts receivable is very important for you to pay attention. And then for bills, you can deduct the expenses when you received bills from vendors. And even though you have not made the payment yet, but you can already deduct that as an expense. So what's important? How is this different from cash method? So for tax planning purposes, what I strongly recommend is number one is review in December, review your accounts receivable aging report. Go over detail of all your customers and evaluate. Are they going to pay you? Who is behind? Because if they are not going to pay you and you already know for sure, you better write it off as a bad debt expense. Because, if you write it off as a bad debt expense, you don't show that as an income, and therefore you don't have to pay taxes on that money, especially when you know the customer is not going to pay you, right? So clean up your accounts receivable. If you know for sure it's not collectible, write them off as a bad debt expense so you won't recognize that income and therefore you won't pay taxes, right? So invoices, again, do not be in a hurry to send invoices if you have not earned that revenue, right? Don't be overly optimistic, enthusiastic, to send invoices to your customers if you have not earned that revenue yet. If you have earned, definitely you need to create invoice and then mail or email, however you deliver invoices to your customers. But if you have not, do not create invoices because you recognize revenue when invoices are created. And the same thing for the bills. Once you get the bill, if you know you already received those services, even though you have not made the payment, for example, attorney, maybe you had legal services and then attorney send you invoice already and you have not paid to that attorney, but you already know you have used those services. Therefore, yes, record those bills in your system because even though you have not paid money, you have not paid your cash for the services on the accrual method of accounting, this is already expense. So again, review your accounts receivable for collection. Don't create invoices if you have not earned revenue, and record the bills if you already received services. The rest of the tax planning is going to be done exactly like for cash method. Therefore, follow us on the YouTube and then we will talk about the 2019 tax planning in the next video. Again, if you like our video, please like us, follow us on the YouTube, follow us on the Instagram. It's Natalia Tax Diva, and we hope to see you soon. If you have any questions, give us a call, 1-800-5040 CPA, 1-800-5040-272, and we are with Colorado Business CPA. Thank you so much and have a great day. Bye.